very good evening. This is Business Day. I'm Shivani Muthana, Business Day, but we leave you with Manisha Gupta for Currency Call. Manisha.
Thank you so much for that, Shivani. Well, there's lots happening in the currency markets as well. We have seen the euro slipping following a weaker than expected reading of the German business sentiment, but continues to trade on the upside against the dollar. Renewed fears of economic slowdown in Berlin is putting pressure on the single currency, which is holding quite firm, actually at 1.4477 on your screens right now. The dollar index is also trading slightly on the lower side, below 74, nearly 0.5% of a decline coming in for that one. In Asia, in the meanwhile, the Indian rupee is trading slightly higher on back of strong local equities and the Asian currencies as well. Rupee on your screens at 45.58, 0.2% of a gain coming in for that one. South Korea won and Singapore dollar also has marked gains in the Asian or emerging currency space today. Let's get in our expert then, and Abhishek Goenka, CEO, India Forex Advisors, now joins us right here in our Mumbai studios. Abhishek, hi, welcome to the show. Let's start with the Indian rupee first, and 46.10 yesterday. From there, we seem to have made a considerable comeback.
Yeah, we discussed 46 in the last show. See, whatever comeback we have seen right now is that the markets were highly oversold in the Asia. In India also it was quite oversold, and the market has got a rebound in the current scenario because of the Bernanke's meets that people are expecting that he's going to have some QE3 or some kind of easing, which will actually blow in a lot of funds in the market and lead the Asian countries and the Asian stocks going up. I think it's the euphoria which is actually making the rupee strong and the Asian currency strong. I think post the euphoria, maybe after 26, maybe a couple of days more strength. I think rupee, we should look at good levels to actually go long, maybe at 45, 30, 40 levels to again a target of 46. I think we are clearly in a bearish territory, and Indian rupee and Indian stock markets are clearly underperforming the other Asian economies, I guess.
So you really are not expecting much from the Bernanke speech on Friday?
I think in terms of, if you see from the history, I mean, last time when he had a speech on this regards, in a particular place, I think they had the QE2. And this time people are expecting that probably this time they're going to have QE3 or some further monetary easing, and probably $200–300 billion worth of fresh bonds going to be getting issued. But if you look at what happened in the past, you know, first QE1 they had 1.8 trillion issues. Second QE2 they had 600 billion. Third, I think another $200–300 billion they might issue. Now, never the money has actually went to actually benefit the US country as a whole. Money has actually went to the various emerging economies, crude, gold, asset classes, Australian dollar, New Zealand dollar and all that.
So you think there might be a different option this time around?
I don't know. I mean, there is clearly a dead end. I don't know. I mean, the US has got this business of always intervening in the market and giving him cheap liquidity whenever there is a credit crisis. I think they are coming up to a dead end. So probably even if they have $200–300 billion, I don't think it's going to be a long-term benefit. So I think the markets are going to get bounced back because of the huge selling that we have seen in the recent past. But after that, it's the same story. I think risk aversion will flow back in, and the currencies would get sold again, and US dollar will get strong.
So going by your flow of logic here, how do you see the dollar index or the euro range going forward?
See, in another couple of months, 2 months, 3 months, I don't see US dollar getting a weak a lot. I think US dollar index, which is in the range of 73 to 75, 75.5, I think should break on the higher side towards 76. The levels that euro and pound is looking at this point of time, around 1.45, and in the pound also it's quite bought at this point of time. It's mainly because of, you know, the euphoria which is in the market as of now. Euro is not supposed to be at 1.45. Ideally, it should have been at 1.40 and below. And we'll still maintain that that euro should come down, correct heavily. I mean, I was reading a recent article which was a very interesting observation that, you know, these banks in the France, Italian, German banks, especially the France, kind of selling we saw recently in Societe Generale and Credit Agricole and all these banks, especially meant that they are actually holding a lot of bonds which are actually huge risky bonds, because especially the sovereign bonds. So any kind of a credit crisis which comes in will severely affect these banks, and if the banking credit crisis comes in, then automatically things will go back to 2008-2009 levels. Also, you know, if you look at the asset mismatch, you know, these banks are having a lot of short-term liquidity problem, you know, if you see. Now, because whatever the funds that they have is always for short-term, they don't have long-term funds in the balance sheet. So if there is a short-term crisis which comes in the times of Bear Stearns and Lehman Brothers, these banks are actually going to be pulled down heavily. So then it is going to be a problem in euro, and I think that's going to be soon.
All right. So one final word then on the other Asian currencies as well. If this turns out, then you might see emerging markets also decline quite sharply in that sense, at least in sense of currencies and equities. If you're looking at the risk aversion trend, then it would be a sell-off coming in the emerging markets soon.
See, in terms of emerging markets, I think the good bets would be Mexican currencies, Mexico, Canada, and some other emerging markets, probably, because especially we have to look in a very, very clear logic that which emerging market is giving you a real yield which is high in the market. If you look at US right now, US is giving a negative yield of around 1.5%. Inflation is around 3.5%. The yield is approximately 2.15%. So negative yield of 1.5%. Still the money is going to US. In the emerging markets, definitely there are some economies which is giving us a positive real yield. So the money will start flowing in there. And in the Asian markets are concerned, the Asian markets, I guess, Chinese yuan is the best bet because they are going to let the yuan appreciate. That's very, very clear message that they have given to the world. They don't want to have the imported inflation, and they have had a positive surplus this last month. So they're definitely going to have a strong yuan. So I think yuan is best in Asian. Maybe Singapore dollar, Korean won is also a good bet, but definitely not the Indian rupee.
All right, Abhishek, we'll let you go at that. Thank you so much for joining us with that view. Well, Indian rupee might be going in for a decline, while dollar or other emerging markets like China, Mexican and Canada is something that Abhishek really is putting his bin on. With that, it's wrap on this segment of Currency Call. Thank you for watching.